Right. We have discussed already the first 20 MCQs of your 2020 advanced level accounting paper. And from this video, we are going to talk about the question that has been tested from question number 21 to 30. Usually in every paper, these 10 questions are little bit difficult questions and little different question, right? And which will be tested in the last part of your syllabus, right? Mainly you get these questions from the accounting standards, cost and the management accounting, and the accounting ratios, right? Those topics will be mainly tested in this particular area. We will see what type of question has been tested, right? What type of question has been tested, and what are the new things that has been tested from the question number 21 to 30, right? May period එක ඇතුලේ මේ questions 10 ඇතුලේ මොන වගේ දේවල් දහලා තියෙන්නේ සහ ඔයාගේ ඊළඟ A level paper එකක මොන වගේ දෙයක් අහන්න පුළුවන්ද කියන දේ අපි මේ discussion එකෙන් කතා කරමු. Right, okay, we will move into the question number 21. Question number 21, right? Question number 21, if you read, Suranga purchased a machine for rupees 8 million on 1st April 2017. When you are reading this question, you should remember your financial year. The ones who have done your A-levels in the year 2020, right, 2020, their financial year will be hopefully from 1st April 2019 to 31st March 2020. Now, if you are writing your exams in 2021, then your financial year hopefully will be 1st April 2020 to 31st March 2021. Then by the time you are reading a date, so then keep having that in your mind, then you can understand, okay, they are talking about the past transactions here, right? So then this particular assets, if you take the 2020, okay, this particular asset has been purchased 2 or 3 years back, right? Mainly 2 years back, if it is for 2020. 30, if you have taken the financial year from 1st April 2019 to 31st March 2020, so where financial statements hadana year එක ගැන හොඳ idea එකක් තියෙන්න ඕනේ. ගොඩක් වෙලාවට 2020 paper එක ලියන කට්ටියගේ financial year එක වෙන්නේ 1st April 2019 to 31st March 2020, right? ඔයගොල්ලන්ගේ financial year එක ඉස්සරහට වෙනස් වෙන්න පුළුවන්. ඉතින් ඒකත් එක්ක බලා ගන්න. Okay, this has been purchased one of the previous years, and its residual value estimated 1.6 million or 1,600,000 respectively, and residual value 8 years, right? Yeah, useful lifetime is 8 years, residual value is 1,600,000. The useful lifetime and the residual value was re-estimated on 1st April 2019. You know that due to the new information, experiences, development, right? You will change the accounting estimations, right? So then here they have changed their residual value and the useful lifetime both, right? They have made a reassessment. Based on that, they identified their useful lifetime and the residual value were 8 years and 1,600,000. According to the new estimation, the remaining useful lifetime and the residual value were 4 years and 1 million respectively. 4 years and 1 million respectively, right? Useful lifetime එක residual value එක වෙනස් වෙලා තියෙනවා. The new estimation was 4 years. Remaining useful lifetime 4 years, and residual value is 1 million. New residual value is 1 million, right? Tell me how many years were the original useful lifetime of these assets? What was the original useful lifetime of this asset? It was 8 years. Right, by the time you purchase it on 1st April 2017, right, by the time you purchase this on 1st April 2017, you identify the original useful lifetime as 8 years. After 2 years, you can see the change was take place, reassessment was take place on 1st April 2019. And after 2 years, when you reassess the useful lifetime and the residual value, you identified that what the remaining useful lifetime is only 4 years. That means original useful lifetime of 8 years has been reduced to 6 years. Then useful lifetime එක අවුරුදු දෙකකින් අඩු වෙලා තියෙනවා. කලින් අපි පාවිච්චි කරේ from 1st April 2017 to 1st April 2019, you have used it for 2 years. අවුරුදු දෙකක් ඔයා මේක පාවිච්චි කරලා තියෙනවා. අවුරුදු දෙකේ ඉඳන් තව 4ක් වාට පාවිච්චි කරන්න කියලා. Right? එහෙනම් the useful lifetime now have agreed to rupees 6 million. Useful lifetime has been agreed to 6 years. 6 years. Right? New useful lifetime is 6 years. Remaining useful lifetime is 4 years. Residual value also has been decreased. That is rupees 1 million. Right? Okay. Now they want you to calculate what is the depreciations of the new machine for the year ended 31st March 2020 as per the LKS 8. Right? LKS 16, property, plant and equipment. Okay. Property, plant and equipment. Hurry. They have given you few answers. They want you to identify the correct answer. Right? Okay. Shall we move into the calculation, Sudha? You know that what is your financial year? What is the financial year from 1st April 2019 to 31st March 2020? This is a financial year that you wanted to consider, right? When I financial year useful lifetime has been changed on 1st April 2019, right? 1st April 2019 useful lifetime of the machine has been changed. This has been purchased on 1st April 2017. From 1st April 2017 to 1st April 2019, it's how many years? 2 years. After using 2 years, you identified that. After using 2 years, you identified that what? Useful lifetime and the residual value of this particular asset has been changed. During this whole year, during this entire year, useful lifetime of the asset should be calculated. During this entire year, useful lifetime of the asset should be calculated based on the what? Yeah, new estimations. Right. We calculate based on the new estimations. But again, soon after the useful lifetime of the residual value is changed, right? How are you going to calculate the depreciation? What is the formula? Usually under the straight line method, depreciation will be calculated. Let's residual value divided by the useful lifetime, right? That is a normal way of calculating the depreciation under the straight line method. But when there is a change in the useful lifetime or the residual value or in any accounting estimation, useful life depreciation should be calculated how? Costless accumulated depreciation less new residual value plus capex, capital expenditure, right? That is what you are supposed to do in calculating the depreciation soon after the changes in the useful lifetime of an assets or residual value of an assets. Hari. එතකොට දැන් මේ අවුරුද්දේ depreciations calculate කරන්න එහෙනම් අපිට පාවිච්චි කරන්න වෙන්නේ පුතා මේ formula එක. Depreciations අයි ඒ useful lifetime එකයි residual value එකයි වෙනස් වෙලා තියෙන නිසා. මේ asset එකේ cost එක කීයද? How much the cost of this asset then? It's 6.4 million. Right. Take it. And take the accumulated depreciations you have provided for these assets as at 1st April 2019. This has been purchased on 1st April 2017. From 1st April 2017 to 1st April 2019, it's 2 years. 2 years. For these 2 years, how much the annual depreciations? For these 2 years, how much the annual depreciations are? Ek apne calculate කරන්න පුළුවන් නේ. මේ බලන්න. දැන් 2017 2019 කියලා කියන්නේ original figures use කරලා calculation එක කරන්න ඕනේ. එහෙනම් පුතා, if you use the original figures and did the calculations, how are you going to calculate the depreciation amount? Costless residual value divided by the useful lifetime. Costless residual value divided by the useful lifetime. What can the useful lifetime of the asset is original useful lifetime 2 years. Cost was 6 million. 8 million, no? Cost was 8 million. Residual value of the asset was 1.6 million, and the useful lifetime, it was 8 years. 8 years. So then how much would be the depreciation? Depreciable amount is 6.4 million, cost minus residual value, that you divided by the useful lifetime of 8 years. And the annual depreciation is 800,000. Right. Annual depreciation 800,000 under the old estimations. So then under that estimation, we have used it for the period of 2 years. This was purchased on 1st April 2017 and the change was take place on 1st April 2019. From that date to this date, it's 2 years. For 2 years, accumulated depreciation will be 1,600,000. It's 1,600,000. So that you will have to deduct. Right. Accumulated depreciation sign new residual value. Right. If you move into the question, what will be the new residual value? The question says the new residual value is 1 million and remaining useful lifetime is 4 years. You can take the new estimations, new residual value, it's 1 million. You can simply ignore the previous residual value plus the capital expenditure. You have incurred no capital expenditure, and the whole thing, there's no capital expenditure, that whole thing need to be divided by the remaining useful lifetime of the assets. The question says the remaining useful lifetime is 4 years. What will be the answer? Cost is 8 million. Cost is 8 million. Sorry. Cost has to be 8 million, it's not 6.4 million. Cost is 8 million. How much will be the amount of depreciation? It's 8 million minus 1,600,000 minus 1 million. Then you get the depreciable amount as 5,400,000. So that 5,400,000 you need to divided by the remaining useful lifetime. 5,400,000 divided by the remaining useful lifetime of 4 years. It's 1,350,000. 1.3 million. 50,000 will be the depreciation based on the changes, based on the new estimation, right? Based on the new, according to the LKS 8, changes in accounting estimation should be adjusted prospectively. Prospective adjustment means making the adjustment for the current year, and if it's affect for the future years, you make the adjustment for the future years as well. So that this particular estimation will be affected for the current year as well as for the next 3 more years as well. Therefore, you need to adjust for all those 4 years, including the current year, right? So then, based on that, if you select the answer, yeah, it will be very clear. The answer number 3. Answer number 3. It's 1.3 million 50,000 will be the correct answer, right? And before you go to the exam, you have a proper idea about changes in accounting estimation. How the changes in accounting estimation affect the depreciation, equity, profit of the business, right? You have them. So when you doing the past paper question from this particular area, you would realize almost everything has been tested, but very straightforward question has been tested, right? Loku amaru questions ahla nae. Habai theory එක හරියට test කරලා තියෙනවා. Right. Okay. With that knowledge, we will then move into the next question, Puta. That is question number 22. Right. That is question number 22. Shall we read the question? Gamage PLC sells the product with 1 year warranty period. Provision as at 1st April 2019. 1st April 2019, in your financial year, when you are doing this question, that is at the beginning of the year, it was 125,000. Warranty expenses paid and warranty expenses recognized. Warranty expenses paid and recognized, they have given 375,000 and 650,000 respectively. What is the provision to be recognized in the statement of financial position as at LKS 37? Sorry, as per the LKS 37. Provision, contingent liabilities and the contingent assets. So that they want you to identify the closing provision. If you look at the company accounts question, right, this provision adjustment has been tested in a different way. That is, they want you to identify the provision related expenditure, right, or the expense relevant for the period. You wanted to identify by preparing the provision account. But in this question, it's completely different. They're giving you the opening balance, provision paid, and the expense recognized. All three they have given. They want you to identify the closing balance, right? So the provision adjustment එක මේ විදියට අහන්න තියෙන probability එක හරි අඩුයි ඔයගලගේ questions වල ඉස්සරහට. මේක අහන්න ඕනේ, අහයි කියලා අපිට හිතෙන්නේ company accounts adjustment එකක් විදිහට. Now මම හිතනවා students ලට ලොකු idea එකක් නැති නිසා මේ provisions record කරන්නේ කොහොමද, opening balances, closing balances, සල්ලි වලින් ගෙවපු ප්‍රමාණය කොහොමද record කරන්නේ, amount relevant for the period කොහොමද record කරන්නේ කියන එක ගැන හොඳ idea එකක් නැති නිසා exam එකේ මේ straightforward question එක දාලා ඔයාට කියනවා වෙන්න පුළුවන් මෙන්න මෙහෙමයි provisions වලට අපි accounts තියන්නේ. හැබැයි මේ adjustment එක company accounts වලදී අපි අනිවාර්යෙන් ඊළඟ අවුරුද්දේ අහනවා. නිකන් අපිට මට හම්බ වෙන communication එක අපිට මේ question එකකින් අපිට ගන්න පුළුවන් information එක ඒක. අපිට තේරෙන විදියට. ඔක නොවෙන්නත් පුළුවන් වෙන්නත් පුළුවන්. ඒ නිසා හොඳම දේ තමයි you get ready with the provision adjustments in 2021 A level paper. It may be something similar to this. හැබැයි ඒ question එකේදී they might give you what informations to calculate the closing balance, but they wanted you to calculate what the expenditure recognized for the period. The expense recognized for the period when you are calculating, how you going to do it? You have to have again a provision account and identify the expenditure relevant for the period, and keep in mind that expenditure relevant for the period you need to record in the P&L under the distribution expenses. මේ question එකේ නම් අපිට closing provision එක calculate කරන්න වෙන විදිහක් දීලා නැහැ. දැන් question එකේ example එකක් විදිහට කිව්වොත් එහෙම the business always make a provision of 5% on their sales balance. එතකොට එනවා මේ අවුරුද්ද අන්තිමේදී on your provision balance you need to make 5% provision. You have to make 5%, so that will be your closing balance. So the closing balance calculate කරන්න information එක මේක දෙනවා. ඒතර දෙන්නේ නැති වුණොත් right අපිට හොයන්න වෙන්නේ මේ විදිහට. දුන්නොත් අපිට මේ විදිහට හොයාගෙන ඒකෙන් අපිට සමහරකට expenditure එක හොයන්න වෙයි. ඒ වගේ adjustment එකක් ඔයාගේ company accounts question එකේ එන්න පුළුවන්. 2021 A levels වලට 2022 A levels වලටත් මේක continue වෙන්න පුළුවන්. ඒ නිසා you have to have some additional attention on this particular adjustment because this is a very straightforward question. I think that this is a question that examiner has given you for you to give some idea about the provisions. Hari. And with that knowledge, we will move into the question. Right. According to the information, they say what? Opening provision is 125,000. Warranty paid 375,000. What is the double entry when you are when you are paying the warranty? It will be cash account credit and provision for warranty account debit. Cash account credit. Warranty paid during the year should be credited to the cash account and debited to the warranty paid account. And then the question very clearly says the amount that you debited to the profit and loss account, amount of provision expenditure relevant for the period 650,000. What is the double entry? For the expenditure relevant for the period, P&L debit and the provision for warranty account credit. So now all three we have now recorded, all the given three information we have recorded in the provisions account. Now what you can do is you can calculate the closing provision balance, right? So when you are calculating the closing provision balance, it's 1,175,000 provision for the in the credit side. So when you take that into the other side, it's 1,175,000. Balance carried down will be how much? 1,175,000 minus 375, it's 800,000. Provision for warranty at the end of the year, rupees 800,000. Provision for warranties at the end of the year will be rupees 800,000, right? This 800,000 is the closing provisions of the business, right? Now, if you look at the answer, then, right? I think that you couldn't see the answer no previously. Excel sheet got provision for warranty had an opening balance of 125, so that you need to go forth from the credit side. Ilagata warranty paid during the period, cash credit, provision for warranty account debit, and the warranty expenditure relevant for the period, P&L debit, and the provision for warranty account credit 650,000. All three once you record, you can see the credit side of the provision account is higher. You take the total of the credit side, it's 1,175,000. Take that 1,175,000 to the other side, and then the carried down balance will be 800,000. So that means in provision for warranty account, your closing balance at the end of the year will be right 800,000, right? 800,000. Now, based on that knowledge, we will move into the question. Which one has to be the correct answer? Which one has to be the correct answer? Yes, fourth one has to be the correct answer. Before you go to the exam, I believe that you should have a proper idea about how to prepare the provision account and calculate the respective or the relevant figure that examiner want you to calculate. It may be the expenditure relevant for the period, it may be the closing balance. Both of these two mainly they will test, then please try to calculate, right? Okay. So cash flow question එකක සල්ලි වලින් ගෙවපු ගාණ ඔයාලට හොයන්න එන්න පුළුවන්. So then that is an operating activity, operating cash outflow if you calculate the provision paid during the period, right? Hari. With that knowledge, we will move to question number 23. The profit and other comprehensive income for the year ending 31st March 2020 of Damita PLC were rupees 1.5 million and 800,000 respectively, right? You calculate the profit as 1,500,000 and 800,000 other comprehensive income, right? May the total comprehensive income it's 2.3 million for the period. Other comprehensive income represent the surplus of 800,000 resulted from the land and the building for the second time during the year. You have revalued the land and building for the second time and credited 800,000 into the other comprehensive income. Neither other comprehensive income 800,000 credit කරලා තියෙනවා. නේද? Second time revaluation එකකදී අපි බලන්න ඕනේ previous year evaluation එක මොනවද වෙලා තියෙන්නේ. සමහර deficit එකක් වෙන්න පුළුවන්, සමහරට surplus එකක් වෙන්න පුළුවන්. Previous year. එතකොට according to that the double entry of the second time revaluation would be changed. මේක කියනවා දැන් පුතා ගිය අවුරුද්ද revalue කරලා මේ asset එක, let's say you have revalued this particular asset in the previous year and generated a surplus. Then in this year, in a subsequent revaluations, if you generated further the surplus or a gain, that means there's a continuous appreciation of the value of the asset. So in such case, this 800,000 definitely can be credited to the other comprehensive income. However, if the previous year generated the revaluation deficit, and this year if you generate the revaluation gain, that gain you can't directly credit it to the other comprehensive income because from the same assets you have previously generated a deficit. But if you look at this question, it's very clearly say the revaluations of the land and the building for the first time you made on 31st March 2016 and had a resulted a deficit of 350. Ehna puta, if there was a revaluation deficit up to the loss, it has to be credited to the P&L. That means it should goes to where other profit for the year. What has happened here? The entire 800,000 you have recognized here as other comprehensive income. That is completely wrong, right? එහෙනම් මේගොල්ලෝ calculate කරද්දී පොඩි වැරද්දක් කරලා තියෙනවා. Profit එක calculate කරද්දී පොඩි වැරද්දක් කරලා තියෙනවා. එයා අපිට කියනවා what is the correct profit after adjusting all these items, right? They want you to calculate these items correctly, profit for the year and the total comprehensive income. Hari. Api yamu calculation eකට. If you move into the calculations puta, mata kiyanna how did they record the second time revaluation? Second time revaluations, how did they account? Assets account, land account, debit rupees 800,000, and they have credited the revaluation reserve account, credit 800,000. Habai puta, they are supposed to record it how much? Me kohomda meka record karanna as there was a previous year revaluation loss, how it would have been recorded. Eka record karanna tibbe mehemai. Kohomda the correct entry? What's the correct entry supposed to be? Assets account, land and building account, debit rupees 800,000, and up to the previous year revaluation loss, it has to be credited to the P&L. The previous year revaluation loss was rupees 350. And up to that amount, this must be credited to the profit and loss account. That means it should be goes to the P&L or the profit for the year 350, and the balance amount only you need to credit it to the revaluation reserve account, which is 450,000. That will be the other comprehensive. So make a profit take a vidiyata. Sorry, second time revaluation එක විදිහට record කරන්න ඕන double entry එක. හැබැයි ඒක record කරලා තියෙන්නේ මේක. එතකොට මේ වැරද්ද right, the entire amount of 600 make a profit and impact එකක් නෑනේ. Land and building has no impact to the profit and loss. කොහොමද මේක depreciation වලට effect එකක් තියෙනවා කියලා කියන්න පුළුවන්. building තියෙන නිසා. නමුත් උත land value එක building value එක දෙකම අපි හරියට record කරලා asset account එකේ කිසිම ප්‍රශ්නයක් නැහැ නම් there's no any effect on the depreciation even. හැබැයි මෙතන you credited to the revaluation reserve account, right? That you when you credited to the revaluation reserve account, how does it affect to the other comprehensive income? Other comprehensive income consisted two elements. What are they? Profit for the year and other comprehensive income. This 800,000 definitely affected to the other comprehensive income, but not to the profit for the year. Profit for the year effect එකක් වෙන්න විදියක් නැහැ නේ. So then that 800,000 you are directly credited to the other comprehensive income. එතකොට the given profit for the year is correct. Given profit for the year has to be it was 1.5 million, that is correct. ඒක හරි, ඒකේ වැරද්දක් නැහැ. ඊළඟට gain on revaluation ඒක හදන්න දෙයක් නැහැ. හැබැයි අපි ඒ profit එකට add කරන්න ඕනේ පුතා 350,000, right? මේ profit එකට අපි 350,000 adjust කරන්න ඕනේ, then only you get the correct profit. මොකද this 350 should be credited to the profit and loss account, right? So when you credited this 350, then මේක එතකොට income statement එකේ කොහෙද පෙන්නන්නේ කියලා වල ප්‍රශ්නයක් තියෙන්න පුළුවන්. සාමාන්‍යයෙන් නම් අපි කරන්නේ පුතා මේක administrative expenses වලින් අඩු කරන්න. මොකද මේ loss එක ආපු වෙලාවේ ආපු අවුරුද්ද ඒ කියන්නේ 2016 වල මේක administrative expenses වලට දාන්න නැති expenditure එකක් විදියට දැන් ඒ expenditure එක reverse කරන්න. You can recognize this as a other income. Other income අපිට recognize කරන්නත් පුළුවන්, but the best thing is you need to reduce it from the administrative expenses because it might have been previously recognized as administrative expenses in year 2016, right? Make a company council වාගේ adjustment එකක් විදිහට output වල කරන්න කියන දේ. එහෙනම් profit for the year, correct profit for the year 1.8 million 50, and there was other comprehensive income of how much? 350,000. There was other comprehensive income of how much? Rupees 350. The other comprehensive income එක කියලා recognize කරන්නේ 450, right? Because it's not 800,000. And other comprehensive income is 450. එහෙනම් පුතා total comprehensive income accordingly it's 2,300,000. දැන් මේ total comprehensive income එක කොහොමත් වෙනස් වෙන්න විදිහක් නැහැ නේ. Other comprehensive income එකට ගියත් profit for the year එකට ගියත් total comprehensive income තමයි. හැබැයි there will be a change in the profit for the year. There will be a change in the profit for the year, right? And the other comprehensive income. Previously profit for the year you recognize 1.5 million, but now it has to be correct profit has to be 1.8 million 50. 1.8 million 50. And after considering all these, you can see the correct answer will be answer number 5. Answer number 5, right? Okay. With that idea, shall we move to the next question? This is question number 24 and the question number 25. For both of these two questions, they have given the common information. We'll read this. The following information is provided for the Carvinga PLC for the year ending 31st March 2020. They have given sales, cost of sales, finished goods, inventory as at 1st April 2019, finished goods inventory as at 31st March 2020, operating expenses, interest expense, and the tax expenditure for the period. Tax expenditure for the period. This is not the tax paid or something. Tax expenditure. Number of order shares in issue was 400,000 and the equity balance was 4.4 million. Right. The okay, calculate average value per share. How? 4.4 million divided by 400,000. Correct. The inventory turnover ratio and the interest cover ratio of the company in times. They wanted to calculate the inventory turnover ratio and the interest coverage ratio, right? Okay, inventory turnover ratio is efficiency ratio, interest coverage ratio is the gearing ratio. They wanted to calculate both of these two calculations, right? Okay, shall we move in with the answer now? They wanted to calculate the inventory turnover ratio. Can someone tell me what is the formula that you use in calculating the stock turnover ratio? Stock turnover ratio, how are you going to calculate with that? Cost of sales, you can see what? Cost of sales divide by what? Average stock. Average stocks. So you are taking the average finished stock for this purpose. At the cost of sales, they have given directly it's 4,200,000. An average stock, how are we going to calculate? Opening stock and the closing stock divided by 2. Opening stock and the closing stock divided by 2. Becoming opening stock is 800,000, closing stock is 600,000. Altogether it's 1.4 million. 1.4 million when you divide by 2, it will be 700,000. Right. And it's how much? 4.2 million divided by 700, which is 6. Stock turnover ratio is 6. Stock turnover ratio is 6, right? And then thereafter, you wanted to calculate the interest coverage ratio. Interest ratio. How do you calculate the interest coverage ratio? PBIT, profit before interest and tax, divided by the interest expenditure. Profit before interest and tax, PBIT divided by the interest expenditure. What can PBIT is how much? Profit before interest and tax, that you will have to calculate. Sales minus cost of sales equal gross profit, right? And for that, you deduct all the operating expenses before the interest expense. And the tax also you don't deduct, right? Tax also you won't deduct, right? How do we calculate the PBIT? PBIT, how do you calculate? Gross profit. Get the gross profit. Sales minus cost of sales is equal to the gross profit. Right. The gross profit difference between the sales and the cost of sales. Sales of this business 7 million, cost of sales 4,200,000. 7 million is the sales, cost of sales 4,200,000. So the gross profit will be 2,800,000, making deduct operating expenses. Api ganne profit before interest and tax. Tax adu karannet naha, interest adu karannet naha. Habai you need to deduct all other operating expenses, which is 1,200,000. It's 1,200,000. So you take 1,200,000. Profit for the year will be profit before interest and tax will be it's 1,600,000, right? And PBIT it's 1,600,000, and that you need to divide by the PBIT 1,600,000. That you need to divide by the interest expenditure for the period. So the question has very clearly says interest expenditure relevant for the period is 320. It's 320, and on this whole thing 1.6 million. When you divide by the 360, you get the interest coverage ratio as 5, right? Inventory turnover ratio is 6. Inventory coverage, interest coverage ratio is 5. Then all when you consider both of these two, what will be the correct answer in the paper? Yes, which one is the correct answer? Second one is the correct answer. Inventory turnover ratio is 6, interest coverage ratio is 5. Right. Okay. With that knowledge, we will move into the next question, that is question number 25. Return on equity and the earning per share. Earning per share you are given as a percentage, right? As a value, but the return on equity you are given as a percentage, right? Okay. They have given the information, they want you to calculate the correct answer, right? Okay. Return on equity, when it say equity has only the equity investors. So then equity investors return is what? Profit for the year. Equity investors return is a profit for the year. And a profit for the year over equity into 100. So that's the formula that you're supposed to use. Anyway, we will move into the answer. Puta. How I calculate the profit for the year then? Puta. Api calculate kara. PBIT make question again. Profit before interest and tax we already calculated. PBIT we already calculated as how much? It's 1,600,000. Neither PBIT is 1,600,000. Then making adu karana api. From this you are supposed to deduct the tax first. Sorry, interest. Interest. How are the interest expenditure relevant for the period? They have given it 320. Once you subtract the interest, you get the PBT, profit before tax. How much the profit before tax? 1.6 million minus this, it's 1.2 million 80, making adukarana tax. Tax for the period is how much? Tax. The question has given the tax expenditure relevant for the period as how much? 400,000. Now the tax expenditure relevant for the period is rupees 400,000. That you need to subtract that. And profit for the year, equity holders return will be 1.2 million 80 minus this, it's 880,000. 880,000 is the profit for the year, right? And they want you to calculate then the equity capital. Make equity capital like here the equity capital relevant for the period you wanted to calculate for the purpose of getting the return on equity. Question say the number of ordinary shares 400,000 and the equity of the business 4,400,000, right? Then metana me mama isella kiwa podi deyak 4.4 million divided by 400,000, you get the average number of shares. They have equity. That stated capital they have given the equity. From total equity, when you subtract divided by the number of shares, you can calculate the average share value, right? You got what I'm saying, nah? The reserves on equity could have the reserves. Stated capital divided by the number of shares. Yes, you can calculate the average number of shares, average value per share. But here they have given the equity balance. So equity balance includes the reserves as well, right? Okay. Then it's 4,400,000. 4,400,000, right? Is a stated capital or the equity balance rather. You can say equity. What is the formula on the return on equity? Return on equity equal profit for the year divided by its profit for the year divided by the number of shares. Number of shares. Profit for the year, equity. Return on equity. Profit for the year divided by the equity into 100. Then profit for the year, it's 880. Equity capital, it's 4,400,000. And if you keep it as a percentage, it's 20%. This is 880. This is 4,400,000. And equity capital is 20%. Calculate earning per share. Earning per ordinary share, right? Earning per share, EPS. EPS. How are you going to calculate? Here. Profit attributable to ordinary shareholders divided by the average number of ordinary shares. ඔයාගේ syllabus එකේ අපිට කෙලින්ම calculate කරන්න පුළුවන් ඒක මේ විදියට profit for the year, but the profit attributable to ordinary shareholders will be the profit for the year. If there's no preferential dividend, if there was a preferential dividend, that you will have to deduct. If there was a preferential dividend, that you will have to deduct when calculating the earning per share. Preferential dividends now, chance that you will divide by the number of shares. Number of shares. That's how you calculate the earning per share. The profit for the year will be, they have given the profit for the year, it's 880,000. Number of shares, they are giving you 400,000. And this year, earning per share, earning available for a per share, it's 2 rupees, right? It's 2 rupees. 2.2 rupees, right? It has to be 2.2 rupees. If you go to the correct answer, if you take the decimals here, it will be Yes, it's 2.2 rupees, right? 2.2 rupees. So then the correct answer will be 2.2 rupees, right? Okay. Then interest cover ratio is 5. Earning per share is 2.2 rupees. Then what will be the correct answer? What will be the correct here? Yes, you can see third one seems to be the correct answer. There they have given the return on equity as 20 and earning per share is 2.2, right? 2.2 rupees. ROE, return on equity, they are giving as a percentage, but the earning per share they are giving as a value, right? Okay. With that idea, shall we move into the next question? The following information related to the product manufactured by a company. Question number 26 of 20 level paper. Cost per unit, total cost, direct cost, non-production overheads. And production overheads අපිට calculate කරන්න පුළුවන්. Then direct cost plus production overhead plus non-production overhead equal total cost. එහෙම නැත්නම් production cost plus non-production overhead equal total cost. එහෙනම් මෙතන out of total cost of 250 total cost එක ඇතුලේ production non-production දෙකම තියෙනවා. Right? 250. ඒකේ direct cost එක කියන්නේ prime cost එක මේකේ 60. So non-production overheads තියෙනවා. Make it 106. So altogether, 90 will be the production overheads if you can just calculate it. All the direct costs are variable. All the make question assumption. Every direct cost is not a variable cost. Every direct cost is not a variable. Salary paid for the production staff on monthly basis is a direct cost, but it's not a variable cost. Right? Further, make question make question main information direct cost variable cost. Further, 50% of the production overheads and 25% of the non-production overheads are variable. Non-production overheads, 100. Production overheads, information. They have given the variable percentage, so the other amount are fixed. The cost per unit and the variable cost per unit of a product. You wanted to calculate the cost per unit. Cost per unit you wanted to calculate, and also you wanted to calculate the variable cost of the product, right? Shall we move into the answer, Buddha? Right. If you move into the answer, Buddha, you can move into the answer. But they want you to calculate what total cost of production first. Okay, direct cost how much the direct cost that they are giving you? Yeah, 60. If the direct cost is 60 and the non-production overhead cost is 100, non-production overhead cost is 100, and if the total cost is 250, you can calculate the total cost of production as how much? 90. So production overhead cost is 90. Production overhead cost is 90. What is the formula for the total cost of production? Total cost of a product. Total cost of a product is how much? Total cost of production it includes only the production cost. If it's a total cost of a product, it includes productions and non-production both. So what's the formula here? Prime cost plus production overhead plus non-production overhead. Right? Prime cost plus production overhead plus non-production overheads. Prime cost method 60. Prime cost is 60, right? But again, production overheads here non-production overheads 100, total cost 250, and a production overhead is how much? It has to be 90. That is how you calculate the production overheads. So we have to calculate your total production cost unit. How are you supposed to calculate that, Buddha? Then in that case you get the prime cost plus what? Only the production overheads. Understand the requirement of the question. And a prime cost here 60 and the production overheads we calculated as 90, and total production cost per unit will be 150. That is 150, right? Hari. If the total cost is 250, but total cost is 250 and the non-production overhead is 100, And now from the total cost of productions of 250, you subtract the non-production overhead is 100. Production overhead cost of 100, then the balance will be the total cost of production, right? So ඒකට අපිට පාවිච්චි කරන්න පුළුවන් formula එක තමයි මේක මොකක්ද? Total cost equal what? Production cost. Cost of production plus non-production overhead. එතකොට මේකේ total cost they have given 250, non-production overheads they are given as 100. Then cost of production is how much? It's 150. It's 150. So then that's another way of calculating the question, right? Calculating the answer, right? Cost of production is 250. Hari. And cost per units they have calculated. ඊළඟට අපිට calculate කරන්න කියනවා variable cost, right? Variable මේ බලන්න මේක ඇතුලේ කියන්නේ variable cost එක calculate කරද්දී production ද non production ද ගන්නෙ දෙකම ගන්නවා. ඒකට කියන්නේ total cost. Total cost only you classified as fixed and the variable. Question එකේ පැහැදිලිව කියනවා entire direct cost is a variable cost. So that is 60 then. ඊළඟට from the production overheads, right? Production overhead cost per unit මේ බලන්න මම කියනවා 50% and the non-production overhead වලින් 25% is a variable cost. Entire direct cost is a variable cost. එහෙනම් production overhead cost is it's how much? 90, no? Right? From 90 you get 50%, that is 45. Non-production overhead is 100. Again 25 is a variable. 100 වලින් 25 කියලා කියන්නේ 25. Variable cost is 130. What were the correct answer? 150 and the 130. 150 and the 130. Which one is the correct answer? Yes, fifth one is the correct answer. That is the fifth one is the correct answer. Right. Then we'll move into the question number 27 and the 28. What they are saying here, the company has two production centers, production cost centers, assembly and the finishing, and following relates to the cost centers. They are giving you two cost centers, right? Assembly and the finishing, both are production centers. Then they further says assembly and the finishing overhead absorption rate based on the machine hours 7 and 9. That means if you consume one machine hour in assembly department as a production overhead cost, you'll have to incur 7 rupees. And if you incur one machine hour in the finishing department as a production overhead cost, you'll have to incur 9 rupees. The number of machine hours budgeted. When you multiply these two, you can calculate the estimated production overheads. So 7 when you multiply by 5,000, it will be 35,000. Then you get the estimated or the budgeted production overheads in the assembly department 35,000, and when it's come to the finishing department it's 36,000. It's 36,000, right? 9,000 into 4. Sorry, 9 into 4,000. Kilowatts hours budgeted they have given. Number of kilowatt hours budgeted 300 and 700 in the each department. Cost of the machinery they have given. Square feet they have given. After calculating the above overhead absorption rates, the following errors were revealed. After calculating the OAR, they have identified some errors. Budgeted depreciation 14,000 has not been included in the calculations. Okay. So the 14,000 of the budgeted depreciation has not been included. Also, if you include in both assembly and the finishing department, it need to be apportioned based on the cost of the machine. Cost of the machine. That means 4:3 ratio you could use. Budgeted electricity charges 10,000 has been apportioned based on the flow area. Instead of the kilowatt hours. So you would have charged this electricity bill based on the kilowatt hours, but they have allocated this on the flow area, right? On the flow area. Therefore, you need to reverse the calculations and record the correct amount. Okay. What they want you to calculate then, what is the overhead absorptions in cost center after the, what is the overheads apportioned to, right? Finishing cost center after the above errors are rectified, The next one they want you to calculate, we'll see then thereafter. Hurry. And shall we move into the answer, Puta? We'll move into the answer. You know that OAR, overhead absorption rates. What is the formula? If it is based on the machine hours, what's the formula? Budgeted production overheads divided by budgeted production overheads divided by budgeted machine hours. Let me question again. They are saying in the assembly department, OAR is 7. Budgeted machine hours 5,000. Right? Enaputa, budgeted production overheads, right, will be how much? It will be rupees 335,000. You know how to do the calculation, it will be 35,000. So then here also the same, right? When it's come to the other department, finishing department, they have calculated it's 9 rupees per machine hour. Then it has 4,000 machine hours. Then budgeted production overhead will be 36,000 accordingly, right? Take a calculate overheads 36,000. Puta, a 36,000 per 35,000 atule machinery. If you move into the question, Puta. Budgeted depreciations of machinery 14,000 has not been included in the calculation. Budgeted depreciations 14 has not been included, right? Budgeted depreciation 14,000 included. Include into what ratio? Into the ratio of on the basis of machine hours, cost of the machine. On the basis of cost of the machine, right? Cost of the machine you can see here 160,000 and 120,000, right? If you divide it by 40,000, it will be 4:3, right? It will be 4:3. So into the ratio of 4:3, if you apportion it, so it will be 8,000 and 6,000. It will be 8,000 and 6,000. Clear? Right. Ilangata, megolu kiyana puta electricity bill. The budgeted electricity bill 10,000 apportion based on the flow area basis. Flow area basis api apportion karana. Again, you would have allocated a portion 6,000 and 4,000. That is wrong. What we need to do is from the calculations, you deduct that 6,000 and 4,000. Wrong amount you remove and record the correct amount. Correct amount has to be based on the kilowatt hours. Kilowatt hours 300 and 700. That means 3:7. That means into the ratio of 3:7, it need to be a portion, so then it will be 3,000 and 7,000. They want you to calculate the after the primary apportionment or even after the secondary apportionment, how much the cost of the finishing department. So the cost of the finishing department is now rupees 45,000 after the correction. So then what will be the correct answer? Yes. Fourth one, you can see the correct answer, right? Ilangata me question ke me apne calculate karanna kiyenawa. Ilang option එක what is the overhead absorption rate of the assembly cost center after the above corrections, right? Okay, puta assembly cost center එකේ production overhead cost එක කීයද after the correction? It's 40,000. Budgeted number of hours will not be changed. 40,000 divided by 8, you 40,000 divided by 5,000. OAR එක කොහොමද calculate කරන්නේ දැන්? Correct amount, how you going to calculate? 40,000 is the budgeted overheads, so that you will have to divide it by what? Number of machine hours, it's 5,000. Correct amount is 40,000. When you divide it by the machine hours 5, so it will be 8. OAR will be 8. Overhead absorption rate will be 8. OAR will be 8 rupees. So then let me just do the corrections here. When you corrected the answer, Sudha, it has to be 8, 9, 9.2, 10, and 11.25. Those are the options given in the paper. So then the correct answer has to be which one? 8 rupees, right? 8 rupees. So the correct one is the first one. That means if you spend 1 machine hour in the assembly department as a production overhead cost, you are supposed to incur 8 rupees. You are supposed to incur 8 rupees. Okay. We'll move to the question number 29. Which of the following statements are correct in relation to the cost volume profit CVP analysis? Right. Okay. Assume that other factors relevant for each of the following situation remain constant. Keep in mind whether the examiner mentioned these or not. When you think about one variables of the BEP, you need to think other variables are constant. First one, decreasing the unit contribution will lead to decrease the break-even point in unit. So if the unit contribution decreases, variable cost also, the break-even point also will decrease. Is it true? No. If the unit variable cost decreases, you have to sell more units to be break-even. Then that particular statement is false. Second one, increasing the contribution to sales ratio will lead to decrease in the break-even point in values. Yes, if the CS ratio is higher, that means what? Your contribution per unit is higher, right? Contribution per unit is higher. That means you need to sell more number of units or more number of sales to be break-even. Yes, it sounds what? Correct, right? Beyond the break-even point, the unit contribution is equal to the unit profit. Exactly. Yes, because from the contribution you are expected to do two things: covering the fixed cost, earning the profit. So then after the break-even point, you have entirely covered the fixed cost. So then after the break-even point, whatever the contribution that you generate is your profit, right? Increase in the selling price will lead to decrease the break-even point. If the selling price increases, contribution per unit increases. So then it leads to decrease the break-even point. Yes. So then, which one is the correct answer accordingly? You can see here the first statement, except the statement number 1A, all other 3 statements are correct. Increase in the CS ratio, decreases the BEP in values. Yes, obviously it's true. Break-even point, beyond the break-even point, unit contribution is equal to the unit fixed cost. That is also fine. Increase the selling price, decrease the break-even point. That is also fine. Yes, the correct answer will be which one? Yes, fourth one is the correct answer. Right. We are moving to the last question in this discussion. Nihal PLC is considering to purchase a new machine to commence a manufacturing business. Expected useful lifetime is 5 years. The estimated cost and the benefits of this project is given. Purchase price of the expected purchase price 1.1 million. Expected installation charges 200,000. Residual value of the machine at the end of the 5th year. Residual value of the machine 100,000. Annual cash inflows 335. Working capital requirement at the beginning 150, it will be recovered at the end of the last year of the project. Right? Initial cash outflow and the cash inflow at the final year of the project, they want you to calculate. Initial cash outflow, that means in year 0, and the cash outflow, and the cash inflow in the year at the end of the last year. In year 0, cash outflow and last year cash inflow. Right? Okay. What were the choices? They have given 1.1. Yes, they have given the different choices. We will move into the working. Right. So if you moving into the working, you can see initial cost of the machine rupees 1.1 million that you'll have to pay, and the installation charges of 200 you'll have to pay. Right? There will be a cash outflow in year 0. And at the same time, there will be a working capital investment of 150,000. So then altogether, how much would be the initial cash outflow, initial capital, working capital, installation charges? Altogether, it will be 1.4 million 50,000. In year 5, they want you to calculate. Also in year 5, they want you to calculate what? Cash inflow, right? Not the net cash inflow. They want you to calculate the cash inflow at the end of the year 5. So then how are you supposed to calculate it? Residual value is 100,000. So then the initial investment will be recovered 100,000. Working capital investments will be recovered 150,000, and that annual cash flow of 335 you will recover. Annual cash flow of 335 you will recover. All together, annual cash flow 335, working capital investment 150, and the residual value. All 3 were the cash inflow at the end of the year 5. So then accordingly, the total cash flows will be 585. Residual value, working capital, and the annual cash flows, right? Okay. If you move into the question, so then what will be the answers to the? Yes, it will be the fifth one. Annual cash outflow is, sorry, initial cash outflow 1.4 million 50, net cash inflow 585,000. Right. Okay. Right. So with that, we have concluded in 2020 A-level paper, question number 21 to 30. So then in our next discussion, we're going to talk about from 31 to question number 31 to 40. And then the last discussion, we are going to talk about the question number 41 to 50. So then likewise, we'll cover up entirely the entire paper. If you haven't watched any part of this, this consists of 5 parts, right? If you haven't watched any of these, please watch that. And you ensure that you can answer all the 50 questions that has been tested in the most recent accounting paper. Right. Okay. Thank you, everyone. We'll meet up with another discussion. Right. Thank you.